What's up guys, my name is Kevin. Today I'll be talking about the benefits of getting a credit card at 18. I first applied for my first credit card at 18. The day of my birthday, I went on my local bank's website that I had and applied for their credit card for college students. And this credit card wasn't the best for rewards wise, but it still gave you points back for everyday purchases you put on that card. And those points could be used for gift cards and electronics. And really just like the benefits of getting your first credit card, which I kind of like recommend to discover its student card. It's one of the best starter cards for anyone that wants to start out with the credit card game. Gives you good rewards like cash back, discounts on like gas and restaurants, which is a really good deal for your first credit card. Intention of getting a credit card at a young age is just to grow your credit score. Like everyday purchases, put everything on that card and put auto payment on it. It might not seem a lot when you're younger, putting like $2-3 purchases or even just groceries or gas, but it's going to build up your credit. And creditors or lenders want to see a good history, seeing like this person can pay back the money, has a good track record, and is financial literate. The max is 850, and the closer number you get to that max number, the better deals you get on loans and mortgages and student loans, and in turn could save you tens of thousands of dollars. And most people don't take that into a factor. Like if you want to buy your first house that could cost you hundreds of thousands of dollars, you want to get the cheapest rate to pay it back in theory or logically, so you don't have to pay as much interest. And number two, you could pay it off faster. But when you buy your first house, it should be kind of like a starter home. It's not going to be the nicest, it's not going to be the biggest, it might not be in the best neighborhood, but it's the house you own and you're building equity in it and paying it off. And most people that use credit cards aren't financial literate. They think a credit card is like an infinite amount of money, but it really isn't. That's how kind of like credit card companies make a lot of money or stay in business. Most of the population doesn't how credit cards work, and they just pay off the minimum balance each and every single month and don't take in the fact that these credit card companies, after the first year of owning this specific credit card, could charge you like 20 to 30% interest each and every single year if you just pay the minimum each month, which is crazy. But I view a credit card as kind of like an asset. Like, how much money could I make off this credit card company? Right? It sounds nerdy, but it's true. Like, I have 3 credit cards in my disposal, and my first one was through my local bank, a standard card for college students, like a secured card, and gave you little to no bonuses. My next credit card was the Chase Freedom, and this card offered 1% back on everyday purchases, 5% back on special categories each quarter, and those categories could be restaurants, home improvement stores, gas, streaming services. And with this card, I also had other benefits too, like each and every single month they update it. Like you could save 10% on Amazon, 5% at Best Buy, 5% on Starbucks. It's like cool rewards. Like if you use a credit card and the things you buy, the products or services you buy each and every single day, you could get a discount on it just using your credit card. Most major credit cards like Chase have other benefits too with it. Not just like the 1% back, 5% back on special categories, but insurance on car rentals, warranty extensions, cancellation fees. Like if your flight gets canceled, Chase could reimburse you. And I also forgot to mention, like, in credit card companies like to incentivize people to, when they open new credit cards, like if you spend a certain amount of money in the first 3 to 6 months, you get cash back, and that cash back turns into points, and those points could be used for travel, gift cards, and like electronics. And going to my last card is the Chase Freedom Flex. So it's a little kind of like confusing, but it's a 2.0 version of the Chase Freedom. So they just continued the Chase Freedom card, but people that got the card before it closed could still have it and make purchases on it. And this Chase Freedom Flex card has the same benefits: 1% back on all everyday purchases, 5% back on special categories, 3% back on restaurants, dining, and drugstores. Really just kind of like summing up this video. It's all about just building your credit early, knowing how to use a credit card, making auto payment each and every single month on your credit card bills so you don't have a remaining balance and have to pay interest on it. It's all about putting everything on it because you just get cash back, 1% back, 1.5% back, 5%, and you just get rewards. That's how companies reward you. Starting now and knowing like what a credit card is and know how credit card companies make money off people that aren't financial literate. And one more last tip, like if you want to just maximize the growth of your credit score, use 30% of your limit and just pay it off right then and there if you're into that stuff, to grow your credit score as fast as possible. But when you get to like a certain credit score, like I think around 750 or 760, there's like no really incentive to grow your credit score past that, because most people that lend out money, like mortgages and car loans and student loans, they're going to give you the best loan with that score. And like after 750 or 760, like it's all about maybe just bragging rights or anything. But thank you for watching, and peace out.